everyone, welcome back to Stock Market Weekly. I'm your host Evan Medeiros, and we have a action-packed episode for you today. There's so much to cover: actionable insights, trade ideas, market analysis, how to think about this market pullback, and if there's more coming. We're going to talk about all of it. Before I forget, because I will by the end of this episode, have a wonderful, happy Thanksgiving. Enjoy some time off, eat tons of food, and enjoy that cranberry sauce and stuffing and turkey. Let's get into it. Before we do, this is the time of year where we do run a Black Friday sale ourselves over here at the Trade Risk. So our memberships, Galahad and Quant Rockets, both of those are on sale. They are 25% off. If you get both, 35% off. And all of our TC2000 for you subscribers, for you users, are downloads in the store. Take advantage of it while you can. We do usually one sale per year. It's this time of, and we're going to talk about our trading systems and how they're valuable in times of market stress. Everybody wants to talk about rewards and big wins, but risk management, surviving, right? It's not sexy, but it is the stuff that keeps you sane and keeps you disciplined. And we've got some examples we want to share later on. So we've got links in the description of the show. Just head to the website, thetraders.com. You can use promo code THANKS2025 to get that discount. Thanks for everyone who supports our work here at the Trade Risk. Now let's get into it. IBD, also a Black Friday sale going on here. We're going to put this in the description of the show. And this is their IBD Digital. It's just $1, 6 weeks for $6. Easy join here just to see what's cooking, see what they've got on their IBD 50 list. One of the themes we're talking about this week is building a shopping list, right? Building a list of high quality stocks that you want to own at the price you want to own them, just in case this market gets a little more slippery. This is a great way to do it. So check out links in the description of the show. Okay, let's get into it. So first and foremost here, we basically have two big themes hitting the market right now that the market is chewing on, right? It is policy, Fed policy, and the path of rates, cuts, or lack thereof, and the AI capex sort of cycle, investment dominoes that are stacked on top of one another, or Jenga blocks that are stacked on top of one another. But the Fed minutes that we got this week showed a very divided Fed, right? So it just showed kind of polarizing views on both sides. And of course that, kind of decreases the odds again of a December cut. Now, we also got the September jobs report the day after, and we saw unemployment tick higher. And so you've got this competing force here where the Fed is trying to be data dependent. It seems like all the evidence is stacking that they should be moving here. The market is concerned that they're behind, or they're slow, or they're going to make a policy mistake. But on Friday, we had Williams. Is it Williams? I believe it was on Friday morning, basically, coming to the rescue, basically saying, yes, you know what, a cut here in December. The vote seemed, his vote would go that way. He's trying to sway to get that cut because he does think the risk of unemployment ticking higher outweighs the risks of inflation moving higher, right? And so on Friday, we saw a big move here in expectations. So on Friday, 70% on a cut, versus the day before at 39%. And so again, we've talked about it all year long, but this pendulum just will continue to swing here. And perhaps this is just, the song and dance that we just have to expect every single cycle now. But that's what it feels like. Every time we get to a live meeting, we just get, kind of whipped around in these expectations. So that was the first thing. Market having a little bit of anxiety there. Nvidia earnings this week, and they blew it out of the park, right? And Jensen reaffirmed and came out very strong that demand is there, projects are moving. They have not seen this type of sort of out in time, reserved orders out, and you can see their earnings here up and to the right. Data center revenue, which is what everybody is looking at, continues, in fact, even accelerating a little bit. And so that certainly got the market nice and excited going into Friday morning, but we had a turnaround, and we're going to talk about that, or I guess that was Thursday morning. This slide I didn't want to put here, so let's skip that. We're going to talk about it later. Okay, you know what? I got to pause for a second and rearrange this. Okay, apologize. Here we go. This is what I want to talk about next. Index performance. Let's just look at the numbers here. We got lots of things we're going to dive into today. So this was kind of the score here. Everything in the red. The Nasdaq 100 was hit the hardest this week, down 3%, but it was red across the board. Russell did outperform on a relative basis. This was the S&P 500, basically down and to the right with a nice kind of zigzag pattern for us all. Look at the ranges that are here. We're going to look at TC 2000. We're going to look at the live price charts in just a minute, so we'll get a closer look there. Here's volatility, 26, and I think as high as 28 intraday here for the VIX. That's some pretty serious fear coming into this market. I mean, it's the one thing is hedging is happening very fast in these environments, and that is what's preventing such cascades in just a precipitous kind of waterfall in price. You just have hedgers that are coming in such quick fashion that it is putting a floor in the market. This is the VIX sort of backwardation. I'm kind of cheating here. I'm not looking at futures per se, but kind of VIX versus the VIX 3 months. And what you see is anytime this crosses over 1.0, it means that the current spot VIX price is above the 3-month VIX. And that doesn't normally happen, right? Because usually the future is more uncertain. Future volatility is usually more expensive. And so we've seen now two attempts to hold sort of backwardation here. It's a pretty rare, and it shows that the market is stressed when these events happen. And I intentionally put a year-to-date chart here because take a look at April, and the one analogy I'll draw is, we were kind of briefly in backwardation in March timeframe. Then we came back down, and then we saw the big kind of spike here as the market really flushed. And so, this almost reminds me of like, okay, we're trying to get above, we're failing, trying to get above, we're failing, but is the next spike really the one that's going to start to push us up if this market really gets slippery to the downside? There is definitely stress out there. We're not going into the weekend in backwardation. VIX certainly cooled off going into the weekend around 23. Don't forget, it's a holiday shortened week next week, so you're going to have volumes that are going to slow down. It doesn't necessarily mean, though, that price has to stabilize. The one thing that is moving higher concretely now is the dollar index. I mean, we have a series of higher lows and higher highs now since bottoming in September. So you have just this much firmer dollar index, which is perhaps, showing the tightening of liquidity. And we're going to talk about that theme a little bit. 10-year Treasury yields not following the dollar exactly. It got as high as 4.15. It's been chopping sideways. It did roll over pretty sharply on Friday. So perhaps, again, with the Fed pendulum odds swinging to the right here on a cut on December now, as those rate cuts likelihood increased, you saw perhaps more supportive action here in the 10-year. So that is constructive. In terms of sector performance this week, the theme from last week was rotation. We specifically biotech energy did not work this week. This was one of the trades I called out and I took a position in. I exited that position this week. I still think energy can get its act together. It's just not, the timing is wrong, and therefore the trade is wrong. So energy could not hold itself up, but certainly healthcare did, and technology was, of course, the hardest hit. Eli Lilly, speaking of healthcare, right, joins the $1 trillion club. This is a lot of what some of these charts look like underneath the hood in healthcare land, or pharma land. So this is somewhere you want to do some homework. We'll talk about a couple of names again later this week. We've got one sector in the bullish state here, looking at our smart trend filter. This is one of the indicators that's available and on sale this Black Friday. It's available for TC2000 and TradingView. Really nice, clean indicator on kind of measuring trend strength, path of least resistance without a ton of noise. Healthcare is there. Everything else is in the neutral state, except for discretionary is bearish. But everything here is basically just showing yellow dots, which is essentially just saying there's mixed signals, there's cross currents, and there's a handful here that look like they're going to just turn down to bearish again next week. 52-week high and low list. We are dominated by stocks hitting 52-week lows. That is for certain. This is now starting to be some of the highest consistent tick ups in the number of stocks hitting 52-week lows. We didn't get into the 200 range, but we are firmly up in the 150s, 160s. This is data as of Thursday. I'm not sure though. Friday was kind of a rebound session, so not too bad, I would expect on Friday's numbers. Percentage of stocks above a 20 SMA, it's falling, coming down to its kind of 2 standard deviation band on the downside. Put to call ratio, again, fear coming into the market, puts being bought, and we did get that big spike up. Markets did not sell off, did not cascade into the weekend on Friday. It was also options expiration week, and so that sort of helps. If you can't get the ball rolling on that OPEX day, then chances are all those dealers are kind of buying back, and you get those supportive flows. Bitcoin is an absolute train wreck, so this shouldn't be anything new. We have been bearish to pessimistic on Bitcoin for a very long time now. 110 was the big level that I was keying off of for many times. For anybody that's a routine listener, you've heard me talk about that level a lot. We had, again, some tactical signs of hope in here. And then as soon as it broke below 100, it's just cascading down. It's a pretty substantial drawdown here in Bitcoin, right? And if we look at crypto fear and greed gauge, this is all year long, right? This goes back to January. This is from CoinMarketCap, so shout out to them. And so fear in the market beyond March and April, which is pretty incredible, right? So there's a lot of pessimism, fear, concern, and worry, rightfully so, right? But this shows you that we've entered some pretty extreme levels, and Bitcoin has now, exceeded a 30% drawdown. And so I posted this on X and StockTwits, but, for any of the new Bitcoin investors, kind of the ETF era Bitcoin investors, where IBIT was the first exposure, this is now the steepest drawdown, right? And you spent an entire year going sideways. And so I think the damage here is pretty substantial. I think we are oversold and we can snap back, but I wouldn't necessarily trust that snapback for too long. And, I see still a lot of, even as sentiment is terrible, there's still a lot of confident bulls that are saying, oh, we'll be back above 100K, in like a couple of weeks. And that just doesn't really translate to me unless something else is happening, right? There's got to be an event to get us back over 100K. This has caused a pretty significant amount of damage, and I got to imagine if price does get this rebound, and I think it will, some type of dead cat bounce, let's call it, or some type of bounce, you're gonna have a lot of eager and aggressive sellers that missed the chance to sell above 100K that are gonna now want to sell. And so I just think the crypto market, while I don't know that the bear has to be, or the further downside targets have to be that much more extreme, I think it could just be sideways and painful for longer than people want. I've been posting this chart a lot. This is the Qs relative to Bitcoin. And directionally, these things, are in the right slope, right? So blue line here is the Qs, green line is Bitcoin. And so they are, they are correlated. The magnitude, though, of this Bitcoin sell-off feels suspicious here on Qs, right? And so this spread is unusually wide right now. And my belief is this will converge. And so I did put on a trade on Friday, long Bitcoin, short Qs. So basically a way to sort of, kind of buy the dip in Bitcoin, which I've, thankfully successfully avoided most of that carnage. I mean, I still have long exposure, but all my active accounts were essentially sidestepped. So now I can kind of come in at a pretty distressed level. I don't know if it's the bottom, but I'm willing to put some cash there. But I'm going to try and hedge it out with a short Q on the other side of it. Now, of course, that could just hurt me on both sides. It's a trade, it could go wrong, but that's the bet I'm making. It's a pretty wide spread here. And so I'm just betting basically for some mean reversion here. I don't really care what happens, if it's the Qs that chase down or if it's Bitcoin that bounces up faster, but looking to just kind of trade that pair a little bit. Again, don't follow me blindly on this, please, because I won't update in time and I could be out of this trade by the time I'm eating Thanksgiving turkey, right? So just be careful. That's just a tactical trade that I'm putting on. We're going to look at some charts in a second. Nasdaq 100. This is kind of the way I'm thinking of it. This was as of Thursday. We game planned this scenario last week, right? So for anybody who tuned in, basically I said, if we lose the lows here from last week, it's time to manage risk. It's time to, get defensive and be careful, because if we have to come down and test 590 again, I don't think it's going to hold. It did hold on Friday, right? So I was proven wrong on Friday, but I'm still a little suspicious here. I still want to be pretty cautious. 590 is the key level, and I do think we get a measured move down somewhere into the 540 to 560 range if we start closing below, and we're going to talk more about that in just a little bit. We do have a couple of econ data. I'm going to pause here. We're going to look at charts. We're going to look at some of the activity and trading that we've been doing over here as well. All right, so here we go. We've got the S&P 500 loaded up here, and this is the daily look now. So we have, sort of all the signs and ingredients of sort of a distribution top pattern here, right? It hasn't confirmed yet. It's not, it hasn't triggered. It had the attempt on Thursday, Friday, but it couldn't get going. So maybe the bulls can hang on, right? Maybe we can survive through the holidays and we don't break down. I could be wrong, but it is shaky territory here. Thursday's session was notable. This was post-Nvidia earnings. So you had the nice exuberance after the call with all the reaffirmation of wonderful AI, runway. And then the market basically just sold into it. And we had this brutal and looks basically identical to the October 10th action here. Almost the same magnitude move from high to low, kind of eerie, probably not coincidence, probably some structured products or some, derivatives sort of wagging the price action here. But regardless, banging our head against this 650 area for the S&P 500. It's holding. If we look at the weekly chart of the S&P 500, zoom out and then take a look at the dollar volume traded this week, pretty substantial, right? Go back as far as you can, and it was one of the heaviest dollar volume traded weeks ever. And so that is notable. It's, digesting down. It's now corrected basically 5.6% from highs. So I think this is the biggest pullback now in the S&P 500 since the April lows. So there's obviously signs of, rotation and pullback and reset, and maybe that will be enough, right? Maybe with this 6% down and then more sideways, we can just kind of heal ourselves over time. It's possible. I just want to be cautious here. Again, there are the 52-week low list that's climbing, what Bitcoin is sort of telegraphing on its move, its cascade lower. I think there's just, some signs that are incrementally kind of stacking up that we just want to be careful about our downside risk. Nasdaq 100 is what we talked about. I said if we came back down and tested 590, it probably wouldn't hold. It did hold. Could have some effects there with just some supportive flows that were maybe gasping at their last straws of supportive action here on Friday because it was a monthly OPEX. And so maybe, the pain next week, it's possible, right? Again, I don't want to speculate. We want to look at the facts here. We want to look at the price action, and the price action right now is telling us we got another heavy volume week. We broke below the past 2 weeks lows, and we're just clinging on to some support here. So that's kind of the read I'm looking at. I think, you're on thin ice. I think we want to have ideas on how we want to protect ourselves, or we want to have risk management protocols in place. And I think a shopping list, which we'll talk about in a little bit, is warranted as well. Volatility got again as high as 28, went into backwardation, it cooled off to 23s, but this is still pretty elevated levels. And so again, we want to respect that and consider that as we move forward here. I want to look at our trading systems really quick because I think it's illustrative. Our long-term Galahad trading system, this is sort of our all-weather portfolio. It's still pretty invested here in the market, right? It's a longer term portfolio. It makes sense, but it still has Nasdaq exposure on. As ugly as this, candle looks here in quote unquote, still the short term, a long-term trend following system, right? Look at a weekly chart, zoom out, right? We've got a long uptrend that's still in place. And so for now, Galahad is still involved in the Qs. It's still involved in gold. It still has healthcare exposure, which did very well this week for us, in staples. So we do have, kind of our collective exposure still in line. But I do want to bring your attention to, this is some of our recent trading, and this line item right here, which is MBT. This is futures trading, but this is Bitcoin, getting out of Bitcoin at 113,000. And so this is the risk management principles that are in place. These are the rules-based discipline kind of systematic trading that we do here, right? And so as much as of a Bitcoin bull as I am over a long-term cycle, I know that when the model spits out a sell signal at 113K, even though at that point I did not want to get out of it, or my intuition as a trader was, oh, this is going to hold and we're going to break out higher. I'm looking at IBIT, but our exit was like right in here. And, me saying, well, if it was up to me, I would just stay long. Well, if it was up to me, I would be down at a 30% drawdown from that point, right? To get back up to our exit point, it's 34% rally. So again, everybody wants to talk about the money-making signals. There's a time to make money. There's a time to play defense. And this is what our systematic investing strategies help you solve. If we go to Quant Rockets, these are some of the exits here in our momentum trading, right? Momentum has been getting really sold off aggressively and hit hard as a factor, right? Last week, we talked about AI leaders getting hit. We talked about it the week before as well. Having the discipline, taking the exits, your first loss is always going to be your best loss, right? I'm preaching and turning this into education, but, lots of small losses here, down 8%, minus 8%, minus 2%, 17% is a big one, 7% down, but then you have your big 150% winners. You have your big 38% winners. You have 100% winners. And so managing risk, taking the exits, systematically managing risk, it is so important in these environments. You got to have a process in place. You can trade the high flying things, you can trade high volatility, but the selling is more important than the buying. And this is what some of the structure here gives you in terms of a rules-based process. I want to talk about three names here, then we're going to look at some other stocks. INSM, I talked about this last week. This is healthcare. This was up and to the right this week. NTRA, also healthcare, up and to the right this week. So again, still some leaders on here in momentum land and biotech and pharma land that are working right now. You just have to do some digging. And yeah, they are a little extended, but that's what's working and that's where rotation is happening. I wanted to bring your attention to one more actionable name. This is COHR, which if we look at the chart here today, you can see that it's trying to hold on here. This is technology, right? And so we do have to be a little bit cautious, but it's trying to build a base. If the Qs start to lose that big level, I would expect this to then hit our exit point as well. But it's something that's kind of hanging in here and trying to act a little bit stronger. It was up on the week, or flat, I guess I'll call it, on the week. And so there's just a little bit of relative strength here. And this exercise of looking at the individual stocks now that could be showing some relative strength or names that you want to own for any number of reasons, this is where you build your watch list, because if we do get that cascade down in the market, or we do get that breach of recent support, you could move pretty quick, and it's good to have your levels mapped ahead of time. Now, speaking of some of the bigger areas, XBI, I'll talk about it again. This was with a theme from last week, which was biotech rotation. Biotech was up 2.3% this week. You could also look at IBB, which was up 2% this week. Energy was one of my call outs from last week. That did not work. I was trying to get this breakout to move up, and we pulled back down. It still looks fine in the grand scheme of things. It's just that the timing was wrong. So I think XLE is still a trade, but you really got to get it above $91, $92 to get that momentum going. Other clues for next week is watch Nvidia. So Nvidia hammered out, or not exactly a hammer, but it recovered off the lows. And so you definitely have some reference points to pay attention to right around this 178 level. If it starts to cascade, then, you know, you could be looking at a bigger pullback. Semiconductors, generally speaking, is your barometer for leadership and, you know, resiliency in the market is something to pay attention to, just a little bit broader. There's a big open gap here. If semis continue to pull back, that could be a place we get to. And then you have a lot of kind of still the momentum names that I would pay attention to, along with Bitcoin. I know a lot of folks are focused on Bitcoin bottoming to signal that maybe the stock market is in a better place. Again, I still believe that convergence trade against Qs and Bitcoin could play itself out. But you could look at sort of the AI trade. I always go to Iron just because it seems like the clearest retail focused, but AI infrastructure play. And so this looks still dicey. I mean, it's definitely oversold in the immediate term. But if this is a bear flag that just broke, you've got another, you know, you've got a measured move here that could take you down to close to $30, right? And so I would be very careful there because there's just risk. I would say you got to reclaim $50. If you can get above 50, then this starts to put a more convincing bottom in. This was a Quant Rockets name. I don't know, I don't need to derail everything, but did it get, oh yeah, here it is, Iron. Yeah, this was the 106% call out. The sell was on 11/13. So 11/13 was this day right here, right? Again, just back to education and back to process. Like, this is a tough sell because you're saying, well, it's already down 4 or 5 days in a row and we're selling on this day. Well, the reason you sell on that day is because, again, the structure damaged, the momentum weakened. And if you didn't sell, then, you know, you'd be down, we sold at the open. So, you know, you're down another 20% if you held on to it. So wait for the remount here. We'll gladly buy Iron. This is in our universe to buy as a momentum stock, as a leadership stock, as a stock that has cycles in this duration in this AI thematic long-term play. We just need the technicals to get better, right? And so whether that means it has to reset down to 30 or go sideways for more time and then reset, that's one way to look at it. You could do Cypher. All of these just look a little bit stressed. Nebius, right? A lot of retail over this. Hot stocks. They had huge runs. If the market cracks and if there is a kind of another leg down, this space feels very vulnerable. Again, it might not happen, but there's pockets of risk that I think are opening up. So get your shopping list ready. You know, if you want to own Iron, you know, $30. If you could get it at $30, that's a good place to stack some bids. If you're an investor and if you're a longer term, investor in this name. So that's kind of the way I'd think about it. Market here looks to me just, again, brittle. And I just want to be a little more cautious and just risk management focused. And I think that's everything I had to say. So went long. Hopefully it was helpful. Black Friday links in the description of the show for IBD and also for trade risk, Quant Rockets, Galahad, TC2000. Plenty of stuff to help instill some discipline and some good practices on the trading front. Otherwise, thanks so much for tuning in. Enjoy your holiday. we'll see. I'll be doing some traveling for the holiday, so I don't know what my schedule is going to be like on Friday. So there might not be a video. Maybe there will be a blog post, or maybe I'll just do an update on the website instead. But next Friday could be a day that I take off from the video just due to travel. So that's it. Enjoy the weekend. Thanks so much.